Okay, good afternoon. George Cavaligos for HFT Bonds. Trade overnight worked. Bought the 10-year against that previous high at 16. Flipped them out a little early. And then got a nice trade from Steve in the chat room today. I'm not going to give that secret away. I'm going to keep that one for our little group here. I'll talk to you guys about that maybe someday when you come and join us. But I don't know what to say right now. It's the old 3 steps higher, 2 steps back kind of trade. We're certainly not out of the woods yet. The 10-year on the weekly put up an inside week. The bonds actually have what looks like a little minor reversal week going on. So we're not out of the bearish woods. We're not out of trouble by far. You know, keeping in mind that head and shoulders bottom idea, but you know, we got a long way to go. I think the bond neckline's up at 135.25 right now, and that's sloping downward. The 10-year neckline's up at 127.12-ish, and that's sloping upward. The symmetry isn't tremendous, but it's something to keep in the back of our minds for next week. And next week's a big week, obviously. We have the GDP, we have the FOMC, and we have unemployment on Friday next week. So I'd like to see the markets trade a little bit higher. I think we'll see some follow-through from today's trade early next week, Sunday night. I'd love to try and, you know, buy a little dip. I think that'd be my favorite trade right now. But if I see anything Sunday night, you know, when I get in front of the screens, I'll post something on Twitter if I see anything. But kind of keep in mind, I guess, buy dips and sell rips. You know, we did bump against some pretty important resistance levels. The 61.8% fib retracement in the bonds was hit and exceeded by a little bit, but now it looks like we may close back below there. Those levels have worked like gold lately, so I'm not sure which way to play it right now. We could just consolidate into all this data late next week and then see what happens from there. I get the feeling that markets are very complacent, and I'm getting worried whenever I see complacency. I'm thinking maybe we could start looking at some cheap upside, downside, you know, structures. You know, buy some cheap puts, buy some cheap calls in case we get some kind of a breakout. The equities markets are, you know, weak, but not really puking. But again, I don't think people are concerned enough about the current market conditions that we're seeing right now, and I'm thinking at some point soon we want to start looking at buying some protective type trades. Alright guys, have a great weekend. I will see you bright and early Monday morning.